Well, very good morning. Welcome to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Shreyansi Singh, where we bring to you news updates from around the world ahead of the market session today. Well, a very positive handover coming in from the US. The broader index, in fact, entered the positive territory to end the 4-week consecutive decline. What are you picking up, Shreyansi?
Well, absolutely. That just about sums it up when you take a look at the handover, because it is indeed positive. When you take a look at the S&P 500, of course, you do have that index eking out again as far as Friday is concerned. So when I'm looking at just the daily basis, the trading session on Friday, that is, you do have S&P 500 adding just about 0.1% broad market index also that ended above those 5,600 levels as well. Nasdaq then 0.5% gain coming in as far as the Nasdaq is concerned, and even for the Dow 0.1% uptick thereabout coming in for the Dow. But it's actually the weekly picture that is also looking bright, as you can see on your screens as well. 0.5% uptick coming in as far as the S&P 500 is concerned. For the S&P 500, it was averting a 5th straight week of losses, so good gain coming in as far as the S&P 500 is concerned. Nasdaq as well, 0.2% uptick on a week-to-date basis, and even when you take a look at the Dow, that's the one that posted 1.2% gain coming in. So you do not only have some strength returning to the markets, you have strength sustaining there as well. As far as the weekly moves are concerned, when you take a look at what else was happening in the market, of course, you did have a session that was volatile, major averages coming off their lows as well, because you do have the quadruple witching day that was on Friday. So that's stock options, index futures, index options, as well as single stock futures expiring. So that's the kind of handover that you're looking at broadly. When you take a look at FedEx and Nike as well, you did have a little bit of a decline coming in, 6.5% decline coming in as far as FedEx is concerned. And even the other economic bellwether that I talked about, Nike, shares were off by more than 5%. So that's the kind of handover that you have on a stock basis as well. But you do have a lot to look forward to in terms of the stock correction and whether or not this sort of strength can sustain this week as well. So definitely something to look at as we kickstart the week, Kanishka.
That's correct. Now moving on to oil prices. So oil prices rose on Friday, posting their second consecutive weekly gains, and this is after fresh US sanctions on Iran and a new OPEC Plus plan for 7 members to cut output raised bets on the tightening supply. Now Brent crude futures climbed 0.22% to close at $72 a barrel. The US West Texas Intermediate crude futures gained 0.3% to settle at $68 a barrel. Now, on a weekly basis, Brent gained more than 2%, whereas the WTI rose more than 6%. Well, these gains come as the United States Treasury on Thursday announced that Iran-related sanctions, which for the first time targeted an independent Chinese refiner among other entities and vessels involved in supplying Iranian crude oil to China, that marked Washington's 4th round of sanctions against Iran since President Trump in February vowed to reimpose maximum pressure campaign on Tehran, pledging to drive the country's oil exports to zero.
Other than that, something to look at as far as oil markets are concerned. So definitely we'll see if this momentum is able to continue as far as equities, even oil is concerned. But let's take a look at the sort of events that you should be watching out for. Bright and early this morning from India, you do have HSBC manufacturing and services PMI that we're looking out for, and from the US S&P Global Manufacturing and Services PMI to look at. Even from the UK, S&P Global Manufacturing and Services PMI is also something that you should be looking at there as well. From the Eurozone, there's of course HCOB Manufacturing and Services PMI to look at. And on the global earnings front, then there's BYD. That particular counter is something that you should definitely be watching out for. When it comes to global earnings and counters back home, then you do have ICICI Securities trading that is going to be suspended, so definitely something that we're looking at. And by the way of other events, you have South Korea's court to rule on PM Han's impeachment case. Atlanta Fed President as well, Raphael Bostic, to be speaking as well, so that speech is going to be in focus. And along with that, you do have Bank of England Governor Andrew Bailey, who's also slated to speak, so keep an eye on that speech as well.
That's quite a few cues to watch out for. Now let's begin our coverage with the news flow from over the weekend. US President Donald Trump said that there'll be flexibility on his reciprocal tariffs, even as he seemed to oppose the idea of making exceptions for the forthcoming duties. Now, Trump also insisted that he did not change his mind when he gave automakers a 1-month exemption on a prior round of import duties early in March. Additionally, the president in fact hyped the April 2 start date for his reciprocal tariffs as America's Liberation Day.
Moving on, US Republican Senator Steve Daines met Chinese Premier Li Qiang in Beijing with a group of 7 American executives following an annual business summit in the Chinese capital attended by top foreign CEOs. In fact, Daines was also accompanied by Qualcomm CEO Cristiano Amon, Pfizer CEO Albert Bourla, and Cargill CEO Brian Sykes as well. Boeing Global Senior Vice President Brendan Nelson was also there along with other executives at Beijing's Great Hall of the People. And this trip, of course, remember, marks the first US politician visit to China since Trump took over in January. So that's the first visit coming in as far as Trump 2.0 is concerned.
That's correct. Now moving on, Canada's newly elected Prime Minister Mark Carney has called for snap election in the country on April 28th. The ruling Liberal Party of Canada will be up against the opposition party, the Conservative Party of Canada. Now this comes in order to ensure that Canada gets a government with a stronger mandate than the Liberal Party currently has. Remember, this also comes amid the ongoing trade war with the US. And Trump's repeated threat to annex Canada to make it the 51st state of the US, which Canadians outrightly have rejected.
Alright, then moving on, shifting focus, then the wife of Istanbul's embattled mayor has recently addressed a huge crowd of people who were protesting for the 5th consecutive night since his arrest. Dilek Kaya Imamoglu also told the demonstrators outside City Hall in Istanbul that the government of long-time President Recep Tayyip Erdogan would pay for targeting the popular opposition figure.
That's correct. With that, it's now time for a short break on this edition of Market Cafe. Stay tuned to ET Now for more news and updates on the other side. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka, and Shreyansi. Well, it's now time for an Asian market check. Well, the Asia-Pacific markets opened mostly lower this morning as US President Donald Trump's April 2 tariff deadline looms. However, apart from Korea's Kospi, most other indices have turned green now. Now, South Korea's Kospi lost more than 0.5% this morning. Japan's Nikkei 225 was up 0.14%. Hong Kong's Hang Seng Index is now up 0.17%. Well, these moves come as over the weekend, China's Premier Li Qiang cautioned rising instability and called for countries to open up markets and enterprises. In fact, according to Barclays, there's unlikely to be any real stock upside until there is clarity on the tariff front, which could come on April 2 when several duties are expected to take effect. Now, in terms of cues for the Indian market, GIFT Nifty indicates the equity market may open above the 23,500 levels.
Absolutely, that's the kind of open that we're penciling in at this point, especially given that strong handover that we have coming in as far as the US markets are concerned. Of course, on Friday back home, we closed around 23,350 levels, and currently we're penciling in that start above 23,500 or just at that level. So let's see how that pans out for us. But moving on, let's get you some key commentary then, with the US equity market contribution dropping drastically to sub 50% levels in just a month, and Trump's tariff rhetoric as well constantly rattling sentiment. Investors have in fact begun looking at EMs with more fervor, but is the fervor here to stay at this point? Here are global voices as they detail their EM rationale.
Yes, India still trades at a premium to emerging markets, but is a much smaller premium than it was before the correction about 3-4 months ago. Therefore, again, as I mentioned, we start to look into some of the companies that we like to find opportunities. Now, in terms of structural stories, what you want to look into are overall overarching trends that have many years to play out. In India, for example, one of the trends that we really like is inclusion of women on the labor market, and overall kind of like, the ability of India to absorb more manufacturing. I think those are two interesting structural trends.
I think over the remainder of this decade, it is quite likely that US equity markets are going to underperform much of the rest of the world. Or a more positive way to put it is, I think the rest of the world, which was very cheap, particularly Europe and to some degree China, is probably going to outperform the US. And of course, that has already been the case in the short 3 months of nearly, or 2.5 months of 2025 so far. And I wouldn't be surprised if that continues erratically for much of this year.
What we've got is a tech story in China plus a bit of domestic demand. And I think that's waking up global investors. I'm noticing a few global funds that I follow beginning to add back some China stocks. So I think it comes back to this sort of selective story in EM. You know, maybe there's a story in Mexico, maybe at the moment there's a story in China. You know, elsewhere in emerging Asia, you know, if we look at the big markets, Korea and Taiwan are really too correlated to NASDAQ to do well. And in the ASEAN region, there really is a lack of catalysts. If anything, there's some sort of negative policy in Indonesia. I think the story for India is a little bit more complicated. Obviously, the market has sold off. It sold off because people were disappointed with the level of revenue and EPS growth that was being delivered in an expensive market. There's perhaps less confidence on the growth story in India.
Well, those were the global cues coming in as far as the emerging markets are concerned. With
Welcome back. You're watching Market Cafe on ET Now, and it's time to get you some more news and updates. In fact, on a major development for India's energy sector, ONGC's subsidiary OPAL, which stands for ONGC Petro Additions Limited, is set to receive a steady supply of domestic gas starting April 1st. But here's the catch: the price will be 20% above the administered pricing mechanism. That is the APM, and that marks a shift in how industrial gas then is priced as well as supplied. In fact, Prakash is standing by with some more details. Prakash, tell us a little more about this then.
See, OPAL is a subsidiary company of ONGC. In fact, the government has already approved a comprehensive financial package for revival of the company. Now we're learning that it will start getting sufficient gas from 1st April 2025. In fact, ONGC will supply 3.2 MMSCMD gas from 1st April under the revival plan, which is part of the cabinet decision. As you were aware, that the Indian cabinet had approved a comprehensive financial package wherein additional equity infusion of rupees 10,500 crore by ONGC in OPAL was approved. And the whole process is moving forward. And natural gas will be supplied at a price up to 20% above APM price. Along with that, ONGC has set a target to revive the company within the next 2 years. As you are aware, that OPAL operates a mega petrochemical complex in Gujarat, and it was constituted as a joint venture company between ONGC, GAIL and GSPC. But with an additional equity infusion of rupees 10,500 crore, ONGC's stake in the company has crossed 95%.
Well, that's the update coming in from ONGC. Now on to an ET Now exclusive. The Indian unit of South Korean consumer electronics giant LG Electronics is likely to open its IPO by mid-April. Now, LG Electronics India, that recently completed its investor roadshow for the equity sale, is planning to launch its India's biggest initial public offering in 2025. My colleague Anurag Joshi is here with more details.
LG Electronics India, the local unit of South Korean consumer electronics giant LG, is likely to open its initial public offering by mid-April, sources tell ET Now. The company has completed a roadshow for meeting potential investors. LG is one of the top South Korean conglomerates, and this is the second South Korean chaebol to list its shares in India within the past year. Reports have indicated that the size of the IPO is likely to be around $1.5 billion. Hyundai Motor India had completed a $3.3 billion IPO last year, and that is the biggest IPO in India so far in terms of the size. LG Electronics India is selling 15%. LG Electronics is selling 15% of its equity holding in LG Electronics India. And the South Korean giant currently owns 100% equity holding. The SEBI had cleared the draft of a document for the IPO just this week, and in December the company had filed its draft red herring prospectus with the SEBI and the stock exchange.
All right, thanks Anurag for getting us all of those important details. But moving on then, with the scorching summer upon us, Power Ministry is holding a crucial meeting of all stakeholders to take stock of the ongoing projects, power demand as well as supply preparedness and much more. In fact, Prakash is here yet again to help us with details when it comes to this particular meeting as well. Prakash, over to you.
The government has reviewed the current status of under construction thermal power projects across the country. A very significant development coming in. We are given to understand that the Power Secretary has held an important meeting with the stakeholders. This meeting was very crucial in the backdrop of rising power demand during upcoming summer and monsoon season. In fact, sources are suggesting that the PSUs such as NTPC, CIL, BHEL, SJVN, CIL have attended the meeting. Independent power producers such as Adani Power Limited, JSW Power, Essar Power, Vedanta Power, among others, were also part of the meeting. Power Secretary has asked for operationalization status of new thermal power projects targeted for FY25. In fact, generation companies have been given clear instruction to give priority to operationalize new thermal power projects for FY25 so that any sort of energy demand could be met going forward. Along with that, sources are suggesting that the Power Secretary was informed that approx 2,700 megawatt thermal power projects have already been commissioned. Approx 57 megawatt capacity of new thermal power projects will be commissioned by March 25. Status of approx 28,000 megawatt under construction thermal power projects were also reviewed. Along with that, it was informed that 26,000 megawatt capacity of new thermal power projects are under planning. So these are the important status that were presented before the Power Secretary, and it was decided that the issues being faced by the generation companies will be discussed with the state governments.
Well, that's the word coming in as far as keeping up with the power demand is concerned. Now, speaking of power, Vikas Khemani, the founder of Carnelian Asset Management, says that he's positive on the sector. Let's listen in to his rationale.
In this market, we have also kind of done a little bit more around the power and electricity side of the business, because I think that's again another structural theme, but that's part of sub theme of manufacturing in some sense. But we think that incrementally India is staring at a power shortage over the next 3, 4, 5 years, and the consumption of the electricity is going to go up because of data center, because of infrastructure, metros, malls, office building, residential towers. So as the consumption of the electricity goes up, I think you need to keep pace with the generation and the entire ecosystem. And there, I think a lot of investment, not only in India, globally is likely to happen. And hence, I think that's a one probably segment or sector which I think one should look at, commit some serious amount of. We already have that, but I think some serious amount of we continue to kind of add as and when we get good, interesting opportunity out there.
Other than with that, it's time for a very quick breather on the show. On the other side, more news and updates, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, time now to get you the list of stocks that you should be keeping on your radar bright and early this morning. In fact, Gaurav is standing by with just that list.
Well, yes. First, let's begin our list today with Godrej Properties, because this company has recently acquired 10 acres of land in Bengaluru, and the saleable area and the total gross development value is going to be worth 2,500 crore rupees. Other than that, Reliance Industries is in focus, and the reason being that company has completed its acquisition of stake of Nauyan Shipyard worth 383 crore rupees. Alembic Pharma is also going to be in focus because US FDA recently concluded its inspection at one of the facilities with 0 inspections under Form 483. Other than that, NCC is also going to be in focus because this company has recently won an order from Bihar Medical Services and Infrastructure worth 1418 crore rupees. Railtel is also going to be in focus on the back of the new order worth 25 crore rupees from HPCL. On the other hand, we also have IndusInd Bank, which will be in focus, and there are two news flows. First is that bank has strongly denied all the claims that were made in the media article regarding the tenure of MD and CEO, and on the other hand, company has also appointed Grant Thornton to check all the frauds and any discrepancies that were seen in the audited book of the bank. Lastly, we also have M&M, which will be in focus on the back of the agency news, is that M&M is going to increase their prices up to 3% for all the vehicles, and this price increase is attributed to input cost increase that the company has seen. Let's also not forget that Manappuram Finance is going to be in focus, because Bank of America recently sold around 40 lakh shares, which constitute around 0.5% of the equity via bulk deal. And lastly, we also have Nazara Tech, which will be in focus, because as Ashika Credit actually sold 6 lakh shares in the bulk deal, but on the other hand, Norges Bank has actually bought around 7.9 lakh shares in the company. So definitely watching on all these companies on the back of the news flow that we have received in the morning.
Thank you, Gaurav. Well, that's quite a few stocks to watch out for today during the session. Now, speaking of markets, Gautam Shah, the CMT founder and chief strategist at Goldilocks Premium Research, has a positive outlook when it comes to sectors like financials, metals, and the PSU basket in the current market scenario. Now, among financials, he's betting big on NBFC. Let's listen in to his market outlook.
Ask somebody who is committed into IndusInd Bank or an RBL Bank or a Bandhan, or for that matter, even a Kotak in the last couple of years, that has been gross underperformance. Whereas somebody who has been committed only into an SDFC, ICICI and SBI would not have felt the correction of the last 5 months. And that's my focus area. I want to stick to the big boys. I want to stick to quality. I want to stick to relative strength. And I'm still not tempted to buy any of the underperformers despite the fall of about 20 to 40%. I think I'm very comfortable with SDFC, ICICI and SBI. And I think these three stocks can deliver upwards of 20% over the next 12 to 15 months. They've handled the market weakness really well. Any market stability from here, possibly April onwards, I think they will be the star performer. And SBI, I think at current levels of 700, 720 has been my long-time favorite. I do see that stock, inching towards a level of 1,000 if you have to take a 12 to 18 months view.
That's quite interesting. Other than that, Gautam, what do you feel about a Bajaj Finance, a Chola, a Shriram? Because, much like the consensus playing out in banks, people are pretty bullish on NBFCs too.
Yeah, I think I've been super bullish on NBFC for the last 4 to 5 months. In our big picture report, we specifically highlighted the custom index of the NBFC space. We like the entire basket. In fact, Bajaj Finance has been on our radar for a while now, and I do see them doing, very, very good things over the next 12 to 18 months. So within financial services, the top pocket that we like is NBFCs. I think the valuations are very comfortable there. The visibility of earnings is there, and the charts have beautifully set up in the last couple of months. So the entire NBFC space, Bajaj Finance, Finserv, Shriram Finance, Chola, Sundaram, M&M, L&T Finance, all have very good charts, and it's looking like a new mega trend for the next 12 to 18 months.
Right, but Gautam, power as a space, that is looking interesting indeed, though on the fundamental side, we have been talking about the rise in the power demand and how some of these companies are now gearing up, and even the prices are seen to be stable at this point. But technically, what is your take within the power space? Which are the stocks that you are liking at this point in time?
Just because stock markets have corrected so much and everybody seems to be very pessimistic, it doesn't mean that the India story has gone away. I do believe that the structural India story is very much intact. We might have patches of underperformance. We could even have a bear market for a year, but that doesn't change the overall structure of our bull market. We've had a great rally in the last 2.5 years. If you have to digest that for about 6 to 8 months, you can't say that India has gone off track. Keeping the India structural story intact, I think power, infra, and real estate are three pockets which I think will do exceedingly well. And these are themes that are here to stay. And after this recent correction, we do like the top 3 power stocks. I think they're going to outperform, and this is a great opportunity to buy into them. Similarly, I think the infra story is not going away. I think we've had great news flow in the last few months from the government side. So I believe infra will also pick up from a top stock perspective. And real estate is a mega story. We've had multi-bagger returns in that space, some correction in the last 5 months, but I think all the 4-5 top stocks are now ready for the next wave on the upside.
2024 has been a great year from some of these platform companies. I'm not sure whether you track these companies very closely, but just on the technical front, do you believe that now is the time to maybe start looking into some of these high beta names, case in point being Zomato, Paytm, even for a matter PB Fintech, or even say Dixon? What's your take on these companies? Any stock that looks very interesting to you at this point?
See, there are landmines everywhere and you need to be very careful. We've seen so many of these platform companies correct so much in the last 5 months that sometimes you want to give up on the fundamentals when you see the price action. Yes, there is no doubt that some of these new age platform companies will do very well from a 3 to 5 year perspective. And I think Zomato and Cartrade have been on top of our list, and possibly a Nazara Tech, which I think is very, very interesting at today's prices. But aside of these three, I would be a little wary, because I think after the correction of the last 5 months, many value stocks offer much better risk reward and margin of safety. So why would I be adventurous in getting into some of these platform companies where the entire data or the earnings is on the Excel sheet and you might not see it, given all that's happening in the country right now and the slowdown and whether the pickup at all is going to happen in the next couple of quarters, we do not know. So key point is risk reward not in your favor, but don't ignore them. I think there are a few names, couple of names I gave you, which I think can stand out.
Gautam, also what happens to, some of the more resilient names in this market fall? And I'm going to get specific here. You can choose to not talk about it or give us a sectoral overview. Some of the hotel stocks, for instance, aviation is one of those core portfolio themes. Look at within telecom, a name like Bharti. These are actually names which have not fallen at all in the market correction.
All of them are top quality, Aisha. I think that's the reason they have not corrected. Ask somebody who bought a Lemon Tree or many of the other hotel stocks which have corrected about 40%, and ask somebody who's been invested in Indian hotels, and you would say that there is no impact at all. In fact, Indian hotels has been a favorite for almost 4 years now, and I believe it will do much, much bigger things if somebody has a 3 to 5 year view, even from current levels. So the key message from the market is quality and reasonable valuations have survived in the last 5 months. And this is what is going to play out, because in an environment of a possible slowdown, you can't run away from it. You can't talk about liquidity and say India will keep doing well just because liquidity is in, which was the case in point last year. So I think anything that is top quality leader in the pack, whether it's an Indian hotels, an MCX, an Indigo, a Bharti, an HDFC Bank, a DLF, all industry leaders, all done very well in these last 5 months.
All right, then let's keep it going with commentary then. In fact, we caught up with Vikas Khemani, who's the founder of Carnelian Asset Management, as well, on his favorite sectors in the current market scenario, from IT, defense and PSUs to banking and financial services as well. Even power. He talks about all of these sectors and what his views are when it comes to all of these sectors. Let's go across and listen in.
Over last 5, 10, 15, 20 years, whenever there is a technology transition which has happened, Indian companies have benefited more than actually lost. Whether it was Y2K to enterprise, ERP to digitization to cloud migration, everything, if you see, opportunity size has only become bigger and bigger, because fact that there are 3 major drivers of IT sector, and this I'm talking about structurally. There could be 1 year of here and there can be transition, which is right now we are going through, but India's leadership in the IT services space, right? I mean, Microsoft can go and sell Azure, but the lift shift implementation has to be done by the Indian IT services company, right? Same way, so say a constant technology disruption. Second, our market leadership in the space, and thirdly, aging population elsewhere, which will make sure that more and more technology is adopted. So I think all these things are the structural driver of the IT sector, which will remain. Now, using AI, some companies will deliver services differently. So to that extent, their cost structure might go down. To that extent, price deflation might happen, but that has always happened. Every time IT companies have reduced prices and got more volumes. So like I said, we remain positive in the sector, but you have to identify companies which will benefit from this transition. Some companies will suffer from this transition. Some companies will benefit from the transition. And those are the segments and companies one has to identify and invest.
Okay. Now, where do we go from here in terms of some of the good old themes, defense, PSUs? Where does that fit in?
I think, see, again, defense, a lot of cleaning has happened. Still, I feel could happen some more. But again, I would say depends on the name and that depends on the business model. I would not just defense spending is going to increase, is increasing, but it has its own sort of risk reward. So I would always say that look at company specific and valuation is very, very important. Defense does not mean that you end up paying any valuation, and that's very, very important. So theme remains intact. There's no question on that. Same way, I think within PSU also, again, PSU is not a sector, but PSU, I think you have to look at specific companies. Like, let's say PSU banks, we are quite optimistic about. We have seen a lot of sort of value correction happen, and valuations are quite reasonable, 0.6, 0.7 time book, which we saw similar kind of valuation by the way in 22. And from there, we saw good numbers coming through. So whatever happened at the macro policy level on the monetary side will have positive impact on the growth of these companies. And so that could lead to some bit of re-rating and there could be good risk reward for PSU banks. So I would say look at the sector and within that PSU in general basket is doing sort of well from a governance perspective, but then you have to live with the nuance of each sector and business model of the PSU.
Have you identified anything new which we should discuss? Because last time when we spoke about names like Aditya Birla Retail. In this correction, I'm sure you've shopped a lot. जब सेल लगती है जब भी तो माल खरीदते हो.
So I would still discuss name, Nikun, but I would say that I think this year, and I continue to believe that banking, we overweight banking and financial services, especially the large banks, some of the NBFCs, like you mentioned, they would outperform this year. Already they are outperforming the broader market. They would outperform this year. They will do very well. And that I think is looking pretty decent. Some of the pharma names looking pretty decent. Within manufacturing, because of this whole worry about stocks have corrected, and I think so. So I think nothing new per se. The only thing probably I would say that in this market, we have also kind of done a little bit more around the power and electricity side of the business, because I think that's again another structural theme, but that's part of sub theme of manufacturing in some sense. But we think that incrementally India is staring at a power shortage over next 3, 4, 5 years, and the consumption of the electricity is going to go up because of data center, because of infrastructure, metros, malls, office building, residential towers. So as the consumption of the electricity goes up, I think you need to keep pace with the generation and the entire ecosystem. And there, I think a lot of investment, not only in India, globally is likely to happen. And hence, I think that's a one probably segment or sector which I think one should look at, commit some serious amount of. We already have that, but I think some serious amount of we continue to kind of add as and when we get good, interesting opportunity out there.
Well, let's discuss Khemani's outlook when it comes to the technical standpoint. It's now time for a word from the wise. ValueQuest Ravi Dharamshi believes that valuations are back below long-term averages and that the worst could be behind us. Take a look.
There are three buckets. One is the deep value bucket. Over there, I feel the large private sector banks, some general insurance companies, and some NBFCs and life insurance companies as well. These sectors fall under the deep value kind of opportunity. There are some sectors where there is continuing business momentum. So whether it is renewables, whether it is power transmission, these are continuing business momentum, and we continue to like that as well. And there are some new age sectors which are probably still not yet represented in the market, and which probably brings us to the private equity piece of it, is that aerospace. I think these are all new sectors being born in the market, and people yet don't know the kind of potential it holds. And that is what we will uncover some of it in our private equity investor day today.
Okay, some of the themes in the private equity investor day are aerospace, energy transmission. Now, these are big boy businesses which require a lot of capex. They are dominated by large groups, and while they are exciting businesses, they are not the typical pace where private equity investors they invest in.
No, so see, you are right. The larger piece, the large system integrators or the OEMs is the big boys game. But there is a big supply chain attached to that, where there are a lot of small players which can scale up quite dramatically. And energy transition is not one sector, right? I mean, there are so many sectors associated with energy transition. Nuclear, wind, solar, biofuels, power transmission, electrification, EVs, battery storage. So there are many sectors. And since these sectors are all still evolving, there will still be investment opportunities over here. So I would say that there are enough and more small and mid-sized companies which can scale up. And yes, they will need capital at this point of time, growth capital, and that's where we come in.
Okay. The history of Indian private equity investing is somewhat khatta meetha. There are great success stories, but there are a lot of companies which never make it to the big league. How are you, and since this is public money which you would be managing, how would you ensure that the private equity fund where you're investing in, the journey is going to be a smooth one?
See, nobody can ensure a smooth journey, but what I can say is that we have tried to address a few of those concerns. So number one concern is private equity tends to be an illiquid asset, right? Your money is locked in for 10, 12-year period. We have shortened that horizon. Our products are more 5-7 year kinds.
All right, then moving on, let's get you updates from outside the world of stocks. Then South Korea's Constitutional Court has overturned the impeachment of Prime Minister Han Duck-soo. With this, in fact, Han has been immediately reinstated as Prime Minister and acting President, as the ruling took effect right after delivering the decision. It is also to be noted that he took over as acting leader from President Yoon Suk-yeol, who has been impeached over his short-lived declaration of martial law last year. Moving on, then, Pope Francis returned to the Vatican on Sunday after a 5-week hospitalization for life-threatening double pneumonia. After being discharged from the hospital, he in fact also posted on X thanking followers for their patience and perseverance in praying for his health. Meanwhile, doctors have also advised Pope Francis to also rest for at least 2 months, avoiding large gatherings and strenuous activities. All right, moving on, then shifting focus to Israel. A recent Israeli airstrike on a hospital in Gaza has killed 5 people, including a Hamas political leader and Palestinian medics as well. Meanwhile, the Israeli military also said that its attack followed an extensive intelligence and used precise munitions to minimize harm at the site.
Well, it's now time for some domestic cues. The 5-day budget session for newly elected BJP government in Delhi will start from today. Well, the budget will be tabled tomorrow. The first day is likely to witness the tabling of a CAG report on the Delhi Transport Corporation for 2024. Moving on, Chennai Super Kings registered an easy 4-wicket win over Mumbai Indians in IPL 2025 campaign opener at the Chepauk on Sunday. This marks Mumbai Indians' 13th consecutive loss in their first match of the season, with their last opening game victory dating back to 2012. While Delhi Capitals and Lucknow Super Giants under new captains will face off in Visakhapatnam today.
All right, and with that, completely out of time on this edition of Market Cafe on ET Now. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.